Hello everyone, welcome back to All Financial Discussion channel. For this video is actually a continue on a series of discussion. This will be my last series discussion. Okay, so basically the topics of discussion is the different categories of Singapore stock. So this video I will focus on technologies and electronics, and then hospitality and tourism, and last but not least, transportation and logistics. After that, I will share my portfolio, okay, how I actually invest to build up my retirement fund. So basically, these are the series of discussion. The key objective is how to build your retirement fund with Singapore dividend stock. So before I continue, I like to urge you guys to help me by like this video. Guys, it's free and it's just a few seconds. Help me press the like button now. For those who are new to this channel, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer, this is not a financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you are willing to lose. With this, we are ready to kickstart today's discussion. These slides show the different categories of Singapore stock. Okay, so basically these are what we have discussed earlier on. Okay, so those we have already discussed, they are in green. So this video, I will focus on these three. This is what I'm going to explain. Okay, so firstly, I will explain who are the key players of these categories of Singapore stock. Next, I will discuss on the dividend yield because like I mentioned earlier on, this series of discussion is to build out your retirement fund with Singapore dividend stock. Next, I will discuss why invest into these categories of stock and what will be the risk. When is the good opportunity to buy these categories of stock? When we need to be careful. And then last but not least, I'm going to conclude with a simple strategize on the investment on these categories of Singapore stocks. Let's start with technologies and electronic stock. Okay, so from the word technology, you know that this is actually a growth stock rather than a value stock. So therefore, for these categories of stock, probably they are not so suitable to build up your retirement fund. As I mentioned earlier on, we are concentrate on building up your retirement fund with Singapore dividend stock. So basically, the technology and electronic stock, they belong to the growth-oriented stock. They are actually cyclical stock, which means that there are a lot of ups and downs. In fact, they are actually tied to semiconductors, electronics manufacturing, IT service, and tech innovation. Let's come to the key player. We have Venture Corporation Limit. Okay, so for example, they actually focus on electronics manufacturing service like PCB board, etc. Then we have ST Engineering. This is what we have introduced earlier on. Okay, so ST Engineering mainly focus on military, okay, like aerospace, electronics, and land system. Next will be AEM Holding. Okay, so rather than concentrate on the semiconductor manufacturing, they actually focus on semiconductor testing and the assembly equipment. Last but not least, our local technology, creative technology. Okay, so they focus on audio, gaming, lifestyle, etc. So, like I mentioned earlier on, this in fact belongs to growth stock rather than value stock. So, therefore, from here you can see that the typical yield is actually 1 to 3, which is considered quite low because they mainly focus on growth rather than dividend income. So, this is for technology and electronic stocks. Let me explain why invest into Singapore technologies and electronic stock. But for me personally, if let's say I'm going to focus on growth stock, okay, I will focus on S&P 500, maybe some companies in China or Indian. Okay, basically in Singapore, to be very honest, we don't have a lot of growth stock, but we have a lot of very nice and attractive value stock. But in order to make the discussion complete, I will also discuss why invest into Singapore technologies and electronic stock. Firstly, you are going to have exposure to fast-growing technologies and also the electronic sectors. Next, potential for high capital appreciation. Okay, so in fact, Singapore technology has fulfilled this high capital appreciation during the tech cycles. Next, you can benefit from global semiconductor demand, electronics export, and tech adoption. Last but not least, some company in fact offer some very little dividend but consider still attractive alongside with growth. Next, let's come to the risk when we actually invest into technologies and electronic stock. These are in fact highly cyclical, okay, which means that the cycle actually go up and down rapidly. In fact, they will be very sensitive to global tech demand and semiconductor cycle. Okay, so at current, okay, basically the semiconductor cycle is very attractive. So therefore, okay, it is quite vibrant when you actually invest into technologies and electronic stock currently. It actually dependence on this export. Okay, so probably you can imagine this, NVIDIA actually so-called cannot export to China. So this can be a big issue for those that actually under this tech and electronic stock. Like what he mentioned here, in fact, they can be very vulnerable to trade tension and currency fluctuation. Next, rapid technology change. Okay, technology change rapidly, very quickly. Now AI is the trend. So there will be a risk of obsolete when the technology actually obsolete. Okay, your investment can go south. Next, often lower dividend reliability. Okay, so in fact, this is mainly to focus on the growth stock, on the capital gain. Okay, so this is actually for the technology and electronic stock. I have discussed when is a good opportunity for you to buy the stock. So now I'm going to concentrate when you need to be careful. Okay, so you need to be extreme careful when they actually reach at the peak tech cycle. So from here you can see that after they actually reach the peak, okay, you can see that they will actually have some form of correction. Okay, so basically because of high valuation, and in fact, like I mentioned earlier on, there will be a strong risk of correction. Next, during trade tension, okay, so basically with trade tension, whatever so-called import or export will be impact. Okay, so basically this is also when you need to be careful. For example, when US President Donald Trump actually has this tariff, okay, or trade tension, we need to be very extreme careful when we actually invest into technologies and electronic stock. Next, rapid shift in technology. Okay, so basically this is also another concern. Okay, so currently AI is the key focus. Companies that fail to adapt may underperform. Okay, so there are various examples for companies that fear to change the direction. This can be a big issue. Next will be over leveraged company. Okay, so basically they can be quite vulnerable in the downturn. Next, let me go to explain the simple so-called strategy that you can apply on technology and electronic stock. Buy during the tech or electronics down cycle, okay, because there is a correction. Buy low, sell high. So this is the key objective. Or if not, during the early growth phase. Okay, so basically during the early growth phase, for example, over here, you can consider to buy it. So this is actually the simple strategize. Next, you must be able to hold for capital appreciation. Okay, which means that you must be able to hold, okay, for this trend here. If you are not able to hold for this trend, then you will defeat the purpose into the investment onto technologies and electronic stock. So the key thing is you must be able to hold, okay, rather than the dividend income. So for this form of so-called growth stock, we are not going to focus on the dividend income. Next, focus on company with innovation. For example, Apple, Tesla with good innovation. So this is what it means. And also on a strong balance sheet and global customer base. Next will be hospitality and tourism stock. Okay, so basically these categories of stock, they can be quite cyclical. Okay, so imagine COVID-19 is a big issue for these categories of stocks. They are actually revenue sensitive stock. in fact, they can be tied to hotel, resort, travel, and tourist service. Coming to the key player, for example, Genting Singapore. Okay, basically they have this Marina Bay Sand. Okay, integrate resorts. Next will be the Far East Hospitality Trust. Okay, so this is a form of risk. Okay, so typically in terms of dividend, they can be much better as compared to the rest. Next will be Singapore Development Limit. Okay, so basically this is also in terms of the hotel asset alongside the property development. Last but not least, Raffles Hotel and Resorts. They are actually considered luxurious hotel operator, okay, in Singapore and also the region. Next, coming to the typical you, like I mentioned earlier on, these categories at the risk, they can offer around 6% of dividend. But I like to highlight this is actually very highly cyclical. In fact, they actually depend on occupancy and also the tourist demand. Like I mentioned earlier on, if let's say COVID, okay, these categories of stock can be badly affected. Let me focus why invest into hospitality and tourist stock. Firstly, okay, you are going to have exposure to Singapore tourist recovery. Okay, so basically after COVID, in fact, the tourist sector, in fact, are still in the recovery state and also the hospitality demand. Next, potential for high income and capital gain during the tourist upcycle. Next, this can be considered as a defensive diversification into service-oriented and high-margin asset, okay, because we focus on the luxuries or the integrated resorts. Last but not least, having the ability to benefit from region tourist growth. Okay, so this is why we want to invest into these categories of stock. Next, let me focus on the risk. As I mentioned earlier on, this is definitely considered a highly cyclical stock. Okay, there are a lot of ups and downs. In short, they actually depends on the tourist arrival, the hotel occupancy, and also the travel spending. Next, this can be very vulnerable to economic slowdown. When the economics is not doing well, most of us will cut in terms of tourist travel, etc. We can be also very sensitive to pandemics or some form of travel restriction. Next, this is in fact a high fixed cost. Okay, this is basically for profitability sensitive to occupancy rate. Okay, this occupancy rate is actually revenue generate. For example, in a hotel. Okay, so basically this can be a high fixed cost because the hotel need a lot of money to maintain. Next, in terms of the current fluctuation for region operation, like I mentioned earlier on, for example, these are all Singapore stock. For example, company venture into Malaysia, into Indonesia, into Vietnam. This can be a concern when you actually convert back to Singapore dollar. Next, event-driven risk. Okay, so currently we have this geopolitical tension and also some form of nature disaster, for example, tsunami, etc. So this can be a risk when we actually invest into hospitality and tourist stock. Before I continue the buying opportunity for hospitality and tourist stock, I need your help, guys. I need your help by like this video. Guys, it's free and you can support me by like this video. When more you guys actually help me to like this video will have a better chances to reach out to a larger audience. So guys, help me. Press the like button now. Again, if you have benefit from this video, I hope you can consider to subscribe to this channel and turn on your notification bell. Once again, thank you so much for strong support. Now, I like to focus on the buying opportunity for hospitality and tourist stock. Okay, so during tourist downturn, okay, so price often fall sharply when arrival actually drop or pandemic fear actually emerge. Okay, because there is a market correction, so this in fact is a good opportunity for long-term investor. Next, when valuations are low relative to asset or earnings, for example, the price to book is actually below 1.0, or maybe the discounted forward price to earning ratio, they actually signal a entry point. So this is in fact a good opportunity for you to buy the hospitality and tourist stock. Next, early in tourism recovery phase. Okay, so if you still remember, during COVID, okay, when they actually at the recovery phase here, when people start to travel again, okay, in fact they travel more because they are not able to travel for the last almost 1.5 year. So in fact, after that, they actually travel more. Okay, once they travel more, we are going to have rising tourist arrival. We are going to have easing travel restriction, or in fact, there are more major events. So this in fact can be revenue boost. Next, on company specific catalyst. Okay, so for example, there are some form of renovation. Okay, for example, old hotel, when they are actually have some form of renovation, this can in fact drive up the profit. New hotel opening, okay, for some company, okay, in fact they build some new hotel. This in fact can be a good positive indication for you to enter into the market. Management contract or some buying of the new companies. Next, when dividend yields actually spike temporarily. Okay, so in some case, when the company make excessive profit, they rather to be taxed, they actually give up dividend. So therefore, under this kind of situation, the dividend yield will probably spike temporarily. Okay, so this in fact can indicate that the market actually undervaluation while the fundamental remain intact. When you need to be careful, okay, so at tourist or hotel cycle pit, okay, so always remember this, don't buy at the pit, okay, so there may be correction, so therefore we need to be especially careful when they are actually at the pit, okay, because the valuation may be stretched. Next, global crisis impact travel, okay, so we have definitely see pandemic COVID-19, which actually restrict travel. This can be a key concern for companies that actually operate in hospitality and tourist sector. Geopolitical tension can be an issue also. When the economy has some form of recession, people are less reluctant to travel. They want to save money. So this can be a so-called red point when you actually want to invest into hospitality and tourist stock. Next, on a high leverage, okay, they can be quite vulnerable during occupancy or revenue decline. Okay, so basically this is also a red flag. Rising interest rate. Okay, so when interest rate is high, less people want to borrow to have the luxuries thing. So this can be a key concern. Okay, so because the increased debt service cost for hotel operation can be also a key concern. Because for hotel, they probably borrow from bank to build their hotel, borrow their bank for expansion, for example. When interest rate rise, this can be a key concern because they are going to serve a higher debt serving cost. Next, let me quickly explain the simple strategy that you can actually apply when you actually buy the hospitality and tourist store. Buy during a travel or tourist downturn. Okay, so basically try to buy at the low or the correction or the early recovery. Next, again, you must be able to hold for income and potential capital gain. So for this category, they actually belongs to the growth stock. So you must be able to hold and then have some form of potential capital gain. If not, okay, don't consider these categories. Next, focus on company again with strong brand recognition, prime location, okay, because of hotel with prime location, they can be so-called more attractive to tourists and also solid balance sheet. Okay, so this is for hospitality and tourist stock. Coming to my last categories of Singapore stock will be transportation and logistics stock. Okay, so basically these categories of stock also belongs to cyclical. Okay, so which means that you need to be extreme careful when you actually invest into these categories of stock. This stock, in fact, will be linked to freight, shipping, air cargo, and also logistics service. If you still remember, during COVID-19, in fact, this logistics service is actually ideal for investment. Okay, so basically, these categories of stock, in fact, they are actually very sensitive to trade and economic cycle. Coming to the key player, we have the sets. Okay, so basically they take care of the air cargo. They also provide some form of support in terms of the ground handling in Changi Airport. Next will be Singapore Post Limit. Okay, so nowadays I would say that not many people actually focus to invest into Singapore Post Limit. They are actually doing parcel delivery. This may not be the biggest business for SingPost currently. They also have some form of e-commerce logistic. They support e-commerce delivery. Next, Comfort Delco Corporation. So Comfort Delco, they actually have taxi. Okay, so they actually provide some form of public transport, taxi service, and fleet management. Next will be EZRA Holdings Limit. Okay, so they actually support bus vessels or offshore logistics. So the typical yield for these categories of stock is between 3 to 5. They can be quite variable. Okay, so like I mentioned earlier on, they are cyclical exposed to trade and transport volume. Next, I'm going to explain why invest into transport and logistics stock. Firstly, you are going to have some form of exposure to Singapore's travel hub and also logistic demand. These categories of stock can in fact benefit from e-commerce, air cargo, and also the global supply chain growth. Next, in fact, for some company in this category, they actually provide some stable dividend. Although, okay, during the downturn, they are still able to provide a very stable dividend. Next, this can be in fact another diversification into industry and transport service. Coming to the risk, okay, so basically again, these categories of stock belongs to the highly cyclical. Okay, so in fact, they are actually tied to global trade, commodity flow, and also the transportation demand. Okay, so all these can be unpredictable. So therefore, these categories of stock, they belongs to the highly cyclical. Next, on the fuel costs, okay, like currently we have some conflict in the Middle East that actually affect the fuel costs. Okay, so basically the fuel is basically at record high currently. Okay, or they will be also very sensitive to the interest rate fluctuation. This in fact can affect in terms of the company profitability. Next, they are in fact very vulnerable to economic slowdown. Okay, so like I mentioned earlier on, all this can be a big concern, not only on these categories of stock, or even trade restriction or geopolitical issue. So all this not only affect this category of stock, in fact, almost all the stock. Next will be the competition and regulatory change. This in fact can impact their margin also. Okay, so for example, if there is another strong competitor, this can definitely affect the company so-called profit. Okay, so this is actually for the transport and logistics shares. The buying opportunity for transportation and logistics stock during global trade or economic slowdown, this can be a good window for us to invest into transport and logistics stock. Okay, because the fleet demand actually dips, therefore the stock price often decline. This again can be a good entry opportunity for us. Next, when valuations are attractive, for example, price to earning ratio or price to book, they are actually below the historical average or their competitor, this can be an indicator to buy these categories of stock. Next, early in global trade recovery or logistic upcycle. Okay, so because of the rising freight rate, e-commerce growth or shipping demand, they actually boost up the revenue, which is positive for these categories of stocks. On company specific, okay, so basically, for example, the company actually wins certain form of contract, they have the fleet expansion or operation efficiency improvement. This can be good news in terms of the profit. Next, when dividends yield actually spike temporarily, same case as what I discussed earlier on. Okay, so this is in fact often coincide with market weakness while fundamentals still remain stable. Okay, so this is for the transport and logistic buying window opportunity. coming to my last slide for this series of discussion, okay, on the different categories of Singapore stock. Okay, so when we need to be careful when we actually invest into transport and logistics stock. Okay, so during the peak again, okay, avoid the peak, avoid the FOMO. During the peak trade cycle, the correction may happen, the valuation may be stretched. So this is actually the key concern. Next, with rising fuel costs, okay, because transport are actually very worried about the fuel, which is current issue. When the fuel costs actually increase, the cost of transportation also increase. This can be a key concern with higher operating expenditure. Next, over leveraged company. Okay, so basically this can be quite vulnerable during the downturn. Okay, because you borrow to expand, this can be a key concern during the global economic slowdown. Okay, so when this case here, for example, we are going to have reduced cargo and passenger volume, this may affect the profit of these categories of stock. Next, I'd like to explain the simple strategies that you can actually adopt when you actually invest into transportation and logistics stock. Buy during the trade or transportation downturn, buy during the correction or the early recovery phase. You must be able to hold both the dividend income and also the capital gain. Okay, so this is actually target for long-term investment. Focus on company with strong operation network, diversified logistics service, and also sound balance sheet. So this is what I have for this series of discussion. In this series of discussion, I have discussed the different categories of Singapore stock. So basically from here, you can actually identify, okay, what will be the value stock, what will be the dividend stock. In order to build up your retirement fund, I suggest you to concentrate on the dividend stock. With this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for your strong support. I hope to see you guys soon. Bye for now. Thank you so much.